Oman is a Middle Eastern peninsula nation. The government is extremely open to working with foreign nations by utilizing international agreements and foreign partnerships. Despite this, the government and domestic economy heavily rely upon oil revenues. Both the government and citizens alike rely on oil fuels for spending abilities and to create programs or products for other citizens. Over time, economic strength within Oman has come and gone as oil prices have fluctuated.
Although it is a priority to continue these strong trade agreements with their international partners, it is of also priority to diversify the economy away from their oil dependency, specifically focusing on tourism, manufacturing, and financial services. The implementation of the 2040 Oman Vision Plan to expand their economic growth beyond oil will enhance the strength and competitiveness of non-oil industries within its private sector and ultimately be beneficial.
Oman has seen rising globalization since the Dhofar Rebellion. During said rebellion, the Oman government increased both imports for manufactured goods and exports after the discovery of oil reserves. Since this time, openness has stayed strong. While it may have fallen a bit since the Dhofar Rebellion, the government has continued to utilize foreign partnerships and agreements at an extremely high level. High merchandise trade, when compared with other nations, is extremely high due to large oil reserves within Oman. Further, while high relative to other nations, GDP per capita in Oman tracks oil prices largely and has been seeing decline over the past 10 years. In 1988, Oman's government created the Omanization program, which created new education initiatives in order to increase the skilled workforce. At the same time, Oman also doubled its number of immigrants. This can be seen in the employment by sector graph, as employment in industry increases as skilled workers increase, and employment in agriculture falls. Further, while employment by in services falls during this exact same period, we can still see that service exports are extremely strong. Overall, there's been a general focus on services and industry since the 1970s due to a lack of habitable land for growing agriculture.
Crude oil, petroleum, and natural gas are all very abundant resources in Oman. So Oman began taking advantage of all these resources back in 1967 when the Petroleum Development of Oman, or the PDO, began carrying out production. So it's very, very clear that the country's economy is heavily dependent on oil, as almost 50% of Oman's GDP, 65% of government income, and over 90% of merchandise exports is solely based on petroleum and natural gas. So that's because Oman has a comparative advantage in energy-intensive industries, mainly chemicals and natural gas. So in 1999 and in 2007, you could see a rapid rise in crude petroleum and natural gas prices, which ultimately caused real GDP to grow. Copper, gold, silver, and chromite are also very abundant in Oman. And we could see this affect the mining industry, as we'll be further expanding on this later in the presentation. So talking a little bit more about the top imports of Oman, it's cars, refined petroleum, broadcasting equipment, gold, and iron ore. And I think a very interesting fact to point out is that 2 of Oman's top imports were refined petroleum and gold. So that suggests that Oman participates in intra-industrial trade, which refers to the trade of similar products in the same industry. And another great natural resource is Oman's geographic diversity. It has a lot of mountains, deserts, amazing coastlines, and beaches. So that's what makes it a popular tourist destination, especially in recent years. So we could see that the services sectors boomed in recent years and now contributes to 37.1% of Oman's GDP, and it employed over 50% of the workforce. Overall, Oman's economy is increasingly dependent on international trade. Now it ranks 57th among exporters and 67th amongst importers. And this was the data in 2019. But Oman's over-reliance on natural resources exportation means that the economy is tied to the rise and fall of oil and gas prices. I want to specifically talk about how Oman has been negatively impacted by repeated crashes in global oil prices in 2014 to 2020. In fact, the oil market experienced the worst annual year loss in 2018, and in 2020, when the pandemic hit, oil prices dropped to their lowest point.
Oman's new economic growth is partially due to their current and ongoing diversification of sector growth. Two of the new largest contributors to this have been tourism and mining. Oman's location on the tip of the Arabian Peninsula makes it a prime location and easy travel to Africa, India, and Central Asia. It also has a wealth of natural attractions like its lengthy coastlines and beaches, mountains, wadis, dunes, islands, caves, springs, and variety of wildlife. The Ministry of Tourism has a long-term vision to increase the tourism sector's share of GDP to 6% by 2040, more than doubling its 2018 value of 2.9%. This strategy was launched in 2019, and an estimated 52 billion of investment was allocated for these efforts, with 90% of the total investment coming from Oman's private sector. The government has also been supporting development of new hotels in the country to increase travel, with a total of 412 hotels spanning the country in 2018. There have also been a range of initiatives, such as the launch of the Tourism Development Fund in 2019 that is financed from tourist taxes. Mining in Oman has also been expanding rapidly. Oman is home to a wealth of natural resources like copper, chromite, gold, and silver. There was a new mining law introduced in 2019 to make the mining licensing process more efficient. The 2019 law allows for longer license periods of 5 to 10 years opposed to 1, which encourages investors to make larger commitments of capital and time that are necessary for major mining projects.
As mentioned already, the oil industry is quite a large industry in Oman, and you can see in the graph that oil exports take up the majority of Oman's exports. However, it did decline slightly from 1979 to 2017. Oman is currently pursuing a diversification program in order to export different things besides the oil. And something interesting about that plan that they're doing is that they're providing foreign investors the ability to come into Oman and get a long-term visa for 5 to 10 years where they can invest in different industries and also get the benefits of staying in Oman, having their company headquarters in Oman, living there and being on the ground. And also this graph on the right shows that merchandise imports mostly include manufacturing materials, and Oman is constantly trying to level out the different industries in regards to exports and imports.
So I'm talking a little bit about the benefits that we see here. Despite ongoing cuts in spending, oil and gas still represent nearly 70% of total fiscal revenue. And we could see how this could help Oman avoid a balance of payment crisis and save the peg to dollar. So I want to talk about Sultan Qaboos bin Said, who ruled Oman for nearly half a century. He passed away in 2020, and the new ruler created Oman's Vision 2040 program, which we talked about earlier in the presentation, that aims to diversify the economy away from oil. And this would improve foreign policy and mend relationships with GCC countries. But there are still a lot of risks that are very important to be mentioned. So we could see that there's a wide budget deficit, high and rising public debt. Oman has very, very large external financing needs with investment expenditures, and their current expenditures are falling. We see lowered credit ratings and deteriorated fiscal balances that would increase the cost of borrowing. There's also weakness in domestic demand that reduces imports, and that contributes to a lower current account deficit in 2020. Oman is also experiencing a decrease in foreign direct investment and portfolio flows.
Ultimately, the biggest risk that Oman faces is the tie of oil prices to both government expenditures and investment rates within the country. It is clear from the graphs shown below, or as well as before, that oil directly impacts government spending and investment. as periods with low oil revenues due to lower prices cause government budget deficits and low decreasing investments. On the other hand, when oil prices rise and subsequently oil revenues rise, we see that government budgets rise and investments into the nation rise as well. Ultimately, the reliance on oil is very problematic for the growth of Oman.
Oman's exchange rate agreement is a conventional pegged exchange rate pegged to the US dollar at 1 Omani rial per US dollar of $2.6. Even though Oman's economy is mainly configured of external activity, especially with its oil exports, its exchange market plays a limited role. And within this, the Central Bank of Oman has the responsibility of defending the currency peg. It ensures that it holds an adequate amount of foreign exchange reserves to meet emerging liquidity needs in the system.
So a pegged exchange rate for Oman has plenty of benefits and also plenty of risks. One of the best benefits that they can get from it is currency protection. Since they are controlling their currency with their bank, they can protect themselves against volatile swings in international markets, which can help prevent a currency crisis. And that's one of the main reasons why they have a pegged exchange rate. Also, another benefit that they see is with their exporters. Exporters can gain profit with strong exchange rates because of the pegged exchange rate that they have. In regards to risks, the Central Bank of Oman needs to maintain significant monetary reserves since they need to constantly buy and sell their currency in order to maintain an exchange rate. Another problem with the pegged exchange rate is that it can lead to higher inflation rates in the long term. In regards to capital control flows, since Oman doesn't really utilize currency control flows, they control money market instruments, they control derivatives, they control inward direct investment from foreign investors. And in regards that foreign ownership of companies in Oman can only can be up to 70%, while the rest needs to be owned by Omani citizens. In regards to real estate, foreigners can own real estate in most of the country besides certain select provinces that are only meant for Omani citizens.